Economists are the ones who predict hiring and interpret the numbers for us, but it's the CEOs who are making the decisions. We turn now to one of those CEOs, Ravin Gandhi, who runs GMM Nonstick Coatings, a company that makes nonstick coatings for cooking, baking, and electrical appliances, supplying companies like KitchenAid and Pyrex. Mr. Gandhi comes to us today from Chicago. So welcome back to Bloomberg. Good to have you, Ravin.
Thanks a lot. Let's
start with your business quite specifically and your hiring practices and how your business is being affected right now by trade uncertainty.
Well, I'm happy to report that we are actually above plan year to date, so I think that's great. So we are hiring pretty much across the board, a little bit lower in China because you bring up the trade uncertainty. I think that is the big bullet that we thus far seem to have dodged. All of the bellicose language coming out of the administration. What happened in China really scrambled the supply chain. I heard your previous guest talk about the supply chain. We have a lot of multi-billion-dollar clients that moved some production from China to Malaysia and Indonesia, India, lower-cost countries. So that was absolutely an issue that we saw. But thus far, I mean, the economy looks rock solid across the board, and I hope it continues.
Ravin, good morning to you. Are you looking at these trade tensions as a President Trump-specific phenomenon, or are you looking at the domestic political, the Democratic contenders in the U.S. and thinking, actually, this is going to be a trend that's going to be here for some time, regardless of who is in the White House?
No, I think it's pretty specific to the president, in my view. I mean, if there's something he's been remarkably consistent on throughout his career, if you go back to the 80s and the 90s, he has always demonized globalism and global production. I think that's insane because I know how much how much America likes to buy goods that are produced more efficiently than they can be here. So here's the thing. I think that the president made a calculus. He made a calculus to hit Asia, to hit China specifically, because he didn't think that it would hurt our economy enough, and it would play really well politically. And so far, I think he's right. I think that right now, given the way everything looks, it's going to be pretty hard for the president to lose in 2020. I think that just look across the board economically, and a lot of people are going to look at their paychecks, and if they give him credit for it, despite what the other side thinks, I think that he looks pretty good right now.
And in terms of your supply chain and everything you're saying, Irene, exactly as you mentioned, that becomes really, really important, in particular for the bigger macro picture. Are you hearing anecdotes about people in your industry moving factories away from China? Are you hearing anecdotes about hurting employment in the U.S.? Or are you saying basically that this is really not having much impact on the supply chain, at least up to this point?
No, I think it's having a pretty big impact. Like I mentioned, we are absolutely, they're not anecdotes, they are facts that some of my clients have absolutely moved out of China to many other places to produce cookware, bakeware, and small appliances. The president tried to say that his policies in 2016 would bring all of these factories back to America. That certainly has not happened. I can tell you firsthand, my parent company is a $10 billion Japanese corporation, and they just bought one of my big competitors based in Zurich. So we're now integrating, and part of that integration is we are constructing a plant for the first time in the U.S. in the near term, but it has nothing to do with the president's rhetoric. It has to do with the fact that luckily our demand is big enough where we can justify the cost. But no company, no CEO is going to arbitrarily build a plant in America unless they can make money doing it. That is what capitalism predicts. And besides democracy, I'm a big capitalistic guy, and I think that that's never going to change regardless of who the president is.
And which countries do they move to when they move out of China? I mean, there's a lot of talk about Vietnam. Is that the place to go, or what are the anecdotes and, as you say, the facts telling you in terms of which countries are, in some sense, the substitutes, if you will?
We've seen Indonesia, we've seen Malaysia, we have seen Vietnam, to your point. I actually built a plant for my company in India about 7 years ago. So that business in India was up almost 80% last year, and year to date, they're up around 50%. So India is absolutely, I think that they're about 20 years behind China, vis-a-vis infrastructure. So I think India is actually going to be a real growth story because to the extent that the president keeps a good relationship with the PM of India, they have a lot of potential as well.
So, Ravin, we've talked about how trade affects you and your customers. Let's talk about the ultimate consumer, because ultimately somebody has to buy those pots and pans with your non-stick coating on it. We saw various records in the stock market set on Wednesday. One of the records was consumer discretionary. Are you seeing any effect on the ultimate U.S. consumer who's buying those pots and pans?
You know, it's amazing, but we really aren't. I mean, we have seen prices go up. Some of my clients were caught up in the tranche of tariffs that were enacted in May, and then there would be a lot more if the president does go forward with this $300 billion hit, which I hope he does not. But we have seen some, prices going up. I think it is inevitable that we are going to see prices heading up. That's probably my biggest fear, that, a trade precipitated inflationary situation. But so far, we've all been Cassandras sitting here saying that the sky's fallen, but it's not. I think that we're watching it very carefully. I would say that people like myself who are running companies, we've all gone through sort of denial and anger and bargaining. We're all kind of in acceptance right now that this is the new normal vis-a-vis the president and him saying something but meaning something else, and the art of the deal and the way that he operates. And I think that wave of populism is sweeping the world. If you look at the UK, you look at India, it's a lot of autocratic sort of strongmen, and the world wants that right now.
Ravin, the president seems to want to bring down the value of the dollar as well. He talks about how the dollar has been overvalued, and we've shown many times on Bloomberg plenty of estimates that would agree with him in terms of where the dollar is right now. But how does that play out for your business? You manufacture outside the United States, I think, predominantly, but you sell in the US and elsewhere. What does the strong or weak dollar mean for GMM?
Well, I think that, to his point, if the dollar is weaker, it makes our products less expensive so we can compete globally. I am generally a strong dollar guy. I think that it's a slippery slope generally when you start wanting your currency to weaken and weaken. We are obviously still like the global reserve currency. I am not a fan of the president's tweets about whether it's monetary policy or what he's saying about the Fed. I just think it's really strange in America to have a guy who's trying to control so many things. I think I'm a long-term bull on America. I think America is going to be just fine, whether the president wins in 2020, whether someone else wins in 2020. I'm sure he thinks it's all because of him, but America has, almost, 243 years yesterday, whatever the number was. We have the most diverse, dynamic, self-reinventing economy. So in the long run, I think that we're going to be fine, and I would say a stronger dollar is a better policy.
Okay, Ravin Gandhi of GMM Nonstick Coatings, thanks so much.